Welcome to BigONE Weekly News Update. I'm Mia. As the final week of 2025 wraps up, the financial world presents a tale of two markets. While traditional global equities celebrated a classic Christmas rally, the cryptocurrency sector remained notably subdued, capping off a year defined by structural maturation rather than explosive mania. The Christmas divergence. The final week of December saw global markets surging. The Christmas rally arrived as promised for traditional finance, TradFi, with the three major U.S. equity indices moving sideways on low volume, but hovering near historical highs. The S&P 500 hit a new record, rising 1.4% for the week, while the Dow and Nasdaq gained 1.2% and 1.22%, respectively. Precious metals also performed strongly, with gold, silver, copper, and platinum all reaching all-time highs. In stark contrast, the crypto market drifted sideways. Bitcoin, BTC, fell 0.9% to hover around $87,950. Ethereum, ETH, dropped 2.47% to $2,950, and Solana, SOL, dipped 1% to $125. Despite a year of regulatory shifts and institutional entry, Bitcoin actually underperformed most major asset categories in 2025. 2025, the year Bitcoin became stable. Looking back at the entirety of 2025, the most significant trend was the decline in volatility. In a surprising twist, Bitcoin's volatility throughout the year was lower than that of Nvidia, one of the stock market's hottest performers. This continues a decade-long trend of declining volatility for the asset. Fundamentally, Bitcoin is transitioning from a speculative proxy to a stable investment asset. This shift is largely attributed to the diversification of the investor base, driven by the proliferation of traditional investment vehicles like ETFs. The ETF effect, sticky capital. ETFs remain the primary net absorbers of supply in 2025, accumulating over 160,000 BTC. While this is a noticeable decrease from the 532,450 BTC absorbed in 2024, the behavior of this capital is telling. The data reveals that ETF investors are sticky. During the sharp 30% decline in Q1 2025, only about 6% of EP holdings were sold. A similar pattern emerged in Q4. This indicates that ETF buyers are adopting a buy-and-hold strategy rather than panic selling during corrections. While BlackRock's IBIT drove the majority of inflows, the overall support from ETFs has provided a persistent floor for the market. The hidden battle: institutional demand versus OG selling. If ETFs and corporate treasuries purchased approximately 630,000 BTC, over 3% of circulating supply, in 2025, why did the price mostly move sideways? The answer lies in redistribution. While institutional demand remained robust, it was met with heavy selling from long-term holders, OGs. Essentially, 2025 was a year where coins moved from early adopters to new institutional entrants. The demand was strong, but the supply release from older hands was equally potent, keeping a lid on price discovery. The leverage wipeout. The fourth quarter of 2025 was marred by a leverage crisis. Following a calm summer, risk appetite grew and open interest climbed. On October 10th, a minor news event regarding US-China tariffs triggered one of the most violent squeezes in crypto history. Approximately $19 billion in long positions were liquidated in a single day. This event reset the market, flushing out excess leverage. As we close the year, the derivatives market has fully reversed the November rebound in open interest, returning the ecosystem to a healthy, low-leverage state. Outlook: a coiled spring. Currently, Bitcoin is trading below the level seen during the U.S. election, making it potentially undervalued relative to fundamentals. The stage is set for a pivotal 2026. With the market flushed of leverage and regulations becoming clearer, the next wave of capital is expected to come from pension plans, such as 401(k)s, aiming for 1% to 4% allocation targets. Combined with nation-state adoption and a mildly accommodative monetary environment, the potential incremental demand is in the tens of billions of dollars. As the selling pressure from long-term holders exhausts, the sustained inflows from these new institutional channels may finally allow Bitcoin to break its 2025 containment. While 2025 may not have delivered the explosive moonshot returns that retail traders often chase, it accomplished something arguably more valuable: maturation. The year served as a crucial bridge, transitioning Bitcoin from a volatile speculative instrument into a stabilized, institutional-grade asset. The boring price action masked a massive transfer of wealth from early adopters to sticky institutional capital, creating a higher floor for the entire market. With the speculative froth of leverage now washed away and new capital pipelines like pension funds preparing to open, the crypto market enters 2026 not with a roar, but with a solid foundation. The era of wild volatility may be fading, but the era of sustainable, long-term growth has likely just begun. Join BigONE today and take advantage of the growing cryptocurrency market.